everyone, especially to you, ma'am. First of all, I would like to introduce myself. My name is Ingkong. Our report is all about the Chapter 8. Chapter 8, Finance, Analyzing Financial Statement and Creating Projection. First of all, I will discuss about the preparation of the projected financial statement.
Preparation of projected financial statement. Before that, what is preparation of projected financial statement? So, involves din dito yung estimating a company's to future financial performance based sa assumptions, past data, and plans. So, according to Dr. Baltazar in 2015, according to Dr. Baltazar, his state should prepare the following proven and projected statements from the period 3 to 5 years. So, which is composed of the following. Or the one key statement is a projected income statement which include the revenue. So, revenue, also called sales or turnover, is the total amount of money a company earns from its normal business activities, usually from selling goods or services. That is revenue. Next is cost of goods sold, cost of sales. Refers to the direct cost involved in producing the goods or services a business sales. Next is operating expenses. So, operating expenses are the costs a business incurs through its normal operations, including the cost or goods sold. Operating expenses divided into marketing, distribution expenses, and administrative office. So, what is marketing distribution expenses? These are costs related to promoting and delivering your product or services. So, administrative office expense, these are cover the general overhead needed to operate the business. That is difference between the marketing distribution expense and administrative office expense. So next is other income and expenses. These are non-operating items not related to core businesses operations. So hindi siya nag-cooperate sa mga items. Ito hindi rin siya related sa mga core businesses operations. So next is financing costs. Financing costs also called interest expense. This refers to the cost of borrow funds. Next is income taxes. Income taxes, tax owned based on the taxable income. So the last is net profit tax or net loss. This is the bottom line of the projected income statement. The projected statement of cash flows shows the sources and uses of cash and cash equivalents. So, what is projected statement of cash flows? Showing how cash is expected to move in and out across operating, investing, and financing activities. So, that is the three activities of projected statement of cash flows. First, operating activities. Operating activities start with net income, then adjust for non-cash items and changes in working capital. So, operating activities includes cash sales, service revenues, expense payments, inventory purchases, and accounts payable settlements. Next is investing activities. Covers cash transaction related to purchases and sales of property, plants, equipment, and investments. So, investing activities, cash used for or incur from investment in long-term assets. So, the last is financing activities. Financing activities shows cash flows related to funding the business. So, financing activities involves owner investment, stock issuance, bank borrowings, withdrawals, and dividend payments. The projected balance sheets. Statement of financing positions present a company financial condition at this specific point in time. So what is projected balance sheets? Shows the expected financial position of the business and a future date, typically year end. In details, in the projected balance sheets have assets, liabilities, and equity. So first is assets. Assets are estimated based on operations, investments, and financing activities. Assets have cash, receivables, inventory, equipment, property, and investments. So next is liabilities. Liabilities are estimated based on anticipated operations, purchases, financing plans, and repayment schedules. Liabilities have accounts payable, salaries, taxes, bonds, notes, and mortgage payables. So last is equity. Equity represent the owner's claim on the business after liabilities and deducted from assets. Equity have net worth or net loss. Assets. First of all, what is assets? Assets are resources controlled by a company that provide future economic benefits. So assets, nagrepresent din ito sa everything a company owns. So pang company owns yung assets. Asset, they are categorized into current assets and non-current asset. First of all, what is current asset? Current assets expected to provide benefits within 1 year or the operating cycle. So si current asset, expected talaga siya na provide ng benefits sa loob ng 1 year or sa operating cycle. So expected din siya to converted to cash or use up within 1 year. So, examples of current assets. Example of current assets have cash and cash equivalents. So, about siya sa cash equivalents. So, second, marketable securities, short-term investments. Third, accounts receivables. Fourth, short-term notes receivable. Fifth, other non-trade receivables. Six, inventories. Seven, prepaid expenses. That is example of current assets. The second of categories of assets is non-current assets. First of all, what is non-current assets? Non-current assets are resources that hold value but are not in cash form. So, si current assets, nag-hold siya ng mga value pero hindi sa cash. So, long-term assets used in business operations. So, non-current assets have three examples. So, first, property, plant, and equipment or PPE. So, what is property, plant, and equipment? Refers to long-term intangible or tangible assets used in business operations. So, si PPE, ginause siya to business operations. So, that is non-current assets. I said before or kanina, long-term assets of business operations. So, physical assets net of depreciation. So, PPE or property, plant, and equipment includes land, buildings, and land improvements, office store equipment, and furniture, and transportation vehicles. Second, long-term investments. So, what is long-term investment? Long-term investment for expected period, usually more than 1 year, that are not used directly in operations. So, si long-term investment, extended siya, ano niya, is more than 1 year. Pero, hindi siya directed operations or business operations. So, asset hold for future growth or of company like investments in associates and bonds. Last, intangible assets. What is tangible assets? Intangible assets that provide long-term value to the business. So, si intangible assets, nagpo-provide siya ng mga long-term value to business or operations business. So, si PPE, nag-refer siya sa long-term tangible. Pero si intangible, siya ay nagpo-provide ng long-term value sa business operations. So, intangibles, non-physical asset net of amortizations. So, intangible includes goodwill, patents, trademarks, copyrights, leasehold rights, and computer software.
That's all my report. Thank you.